Imagine a digital storm brewing in the shadows of the global economy, where trillions of dollars swirl like ghosts in the machine, whispering secrets that only the keenest ears can hear. Secrets that could catapult Bitcoin from its current perch around $110,000 to heights that redefine wealth itself. Yet everyone's eyes are glued to the flashy charts and fleeting headlines, ignoring the one signal that's been flashing like a lighthouse in the fog. The relentless expansion of the global money supply that's already priming the pump for an explosive surge. Picture this not as dry data on a screen, but as a cinematic epic unfolding across time, where heroes and villains clash in a battle for the future of money. Starting in the dim glow of a computer monitor in 2008, amid the rubble of the financial crisis, when banks crumbled like ancient empires and trust in the old guard evaporated overnight. A mysterious figure known only as Satoshi Nakamoto emerges from the ether, not with a sword or a crown, but with a white paper titled Bitcoin, a peer-to-peer electronic cash system, a manifesto that reads like a revolutionary decree, promising a world free from the tyrants of central banks, where money flows directly between people, unmediated, uncensorable, powered by cryptography and consensus. And oh, the drama of that moment as Satoshi, whose true identity remains a tantalizing enigma, perhaps a lone genius, perhaps a collective of cypherpunks, plants the seed of rebellion against the fiat overlords who print money at will, devaluing savings and fueling inequality. Fast forward to January 3, 2009, the Genesis block is mined, etched with a headline from the Times newspaper screaming Chancellor on brink of second bailout for banks. A subtle jab at the failing system, and Bitcoin is born not with fanfare but in quiet defiance. Its first blocks humming on rudimentary computers, rewarding early miners with 50 Bitcoins each, worthless then but pregnant with potential, as the network bootstraps itself from nothing. A digital organism learning to breathe. The early days are a wild frontier emotional roller coasters of hope and hardship, where enthusiasts gather on forums like Bitcoin Talk, sharing code and dreams, but also facing skepticism from a world that dismisses it as play money for nerds. Until May 22, 2010, when Laszlo Hanieks, a programmer from Florida, makes history by trading 10,000 Bitcoins for 2 Papa John's pizzas. A transaction worth pennies at the time, but now a poignant symbol of Bitcoin's humble origins, evoking laughter and regret in equal measure, as those pizzas would one day be valued at hundreds of millions. A tale of missed fortunes that tugs at the heartstrings of every investor who ever wondered, what if? By 2011, Bitcoin hits parity with the dollar, a milestone that sparks the first wave of mania, drawing in speculators and dreamers, but also hackers and thieves, as the ecosystem grapples with infancy pains like the infamous MT. Gox Exchange, a repurposed magic, the gathering site that becomes the hub of trading, only to reveal its vulnerabilities in dramatic fashion. Zoom in on 2013, the year of the first true bull run, where Bitcoin surges from under $100 to over $1,000, fueled by media hype and adoption in places like Cyprus during its banking crisis, where citizens turn to crypto to escape capital controls. A real-world drama of financial liberation that feels like a thriller, with prices skyrocketing amid euphoria, only to crash back down in a heartbreaking correction. Teaching early adopters the brutal volatility that would become Bitcoin's hallmark, a cycle of boom and bust that mirrors the human spirit's resilience. Then comes 2014, the dark winter when MT. Gox implodes in a scandal of epic proportions, losing 850,000 Bitcoins to hacks and mismanagement, worth billions today, leaving users devastated, weeping over lost life savings. As CEO Mark Karpels faces arrest in a plot twist worthy of a crime drama. Yet from these ashes, Bitcoin rises stronger, with better security and exchanges like Coinbase emerging to professionalize the space, drawing in venture capital and visionaries who see not just a currency, but a technological revolution. The narrative builds tension through the mid-2010s, as Bitcoin halvings, those programmed events every 4 years that slash mining rewards in half, act like plot devices, tightening supply and igniting rallies, the first in 2012, the second in 2016, each time stoking the fires of scarcity, a concept so emotionally charged because it counters the endless inflation of fiat, reminding us of gold's allure but in digital form, immutable and borderless. Enter 2017, the year the world wakes up as Bitcoin explodes from $1,000 to nearly $20,000, a parabolic ascent driven by retail frenzy, ICO mania, and mainstream media coverage, where families at dinner tables debate investing their savings, hearts pounding with greed and fear, only for the bubble to burst in 2018, plunging 80% in a soul-crushing bear market that weeds out the weak, leaving true believers to hodl through the despair. Their faith tested like martyrs in a historical saga. But resilience defines this story, as 2019 sees quiet rebuilding with institutions dipping toes, and 2020 unleashes chaos with the COVID-19 pandemic. Governments printing trillions in stimulus, devaluing currencies, and highlighting Bitcoin's hedge potential. As it roars back, surpassing old highs in a triumphant return, emotional peaks as investors who endured the winter now reap rewards. Climbing to $69,000 in 2021 amid corporate adoption from Tesla's Elon Musk, who tweets like a modern oracle, swinging prices with words, and MicroStrategy's Michael Saylor betting his company's future on Bitcoin. A bold move that inspires awe and controversy. Yet drama ensues with the 2022 crash, triggered by inflation fears, rate hikes, and scandals like FTX's collapse, where Sam Bankman-Fried, once hailed as a wunderkind, falls like Icarus, his empire exposed as fraud, evaporating billions and shattering trust, Bitcoin tumbling to $15,000, a gut-wrenching low that evokes the despair of lost dreams, but also the catharsis of cleansing, as the industry purges bad actors and emerges leaner. Fast forward to 2024, the resurgence with the approval of spot Bitcoin ETFs in the U.S., a watershed moment that floods the market with institutional money, BlackRock and Fidelity leading the charge, pushing prices to new all-time highs above $73,000 before the fourth halving in April. A ritual that halves rewards again, reinforcing scarcity amid growing demand, and nations like El Salvador adopting Bitcoin as legal tender. A bold experiment under President Nayib Bukele that stirs national pride and global debate, proving crypto's real-world impact. Now in November 2025, the stage is set for the next chapter, with Bitcoin hovering around $108,000 to $113,000 after a rare October dip, the first downtober since 2018. Yet historical patterns scream rebound, as November has been Bitcoin's strongest month on average, up 40% historically, and the market cap swells to over $2 trillion, but beneath the surface volatility. Where prices consolidate in a tight range, low trading volume tempers action, and sentiment swings between fear and greed, with the fear-greed index at 68 indicating cautious optimism. The true tension builds from macro forces, as the Fed's anticipated rate cut on October 29 looms, with 96.7% odds of a 25 basis point trim, potentially unleashing liquidity that propels risk assets skyward. And analysts eye $125,000 or even $130,000 by year's end. But here's the cinematic twist, the signal everyone's ignoring, hidden in plain sight like a buried treasure map. The global M2 money supply, that vast ocean of fiat currency, has hit new all-time highs even during supposed quantitative tightening, up 2.3% since January 2025, a stealthy expansion that's historically correlated with Bitcoin's rallies. Recall 2020's 25% M2 spike igniting an 800% BTC surge, and with the most aggressive print in May-June 2025 at plus 0.63%. Lagging effects point to a 15-17.5% upside in coming weeks, signaling that when true quantitative easing kicks in, printing will accelerate, flooding the system with trillions seeking safe havens, and Bitcoin, with its fixed supply of 21 million, stands as the ultimate absorber, a digital gold immune to debasement. Imagine the emotional weight of this, as retail investors fret over short-term dips, whales like Galaxy Digital Shuffle holdings, sparking brief panics, but institutions vacuum up supply via ETFs, with inflows outpacing mining output, and stablecoin inflows surge by $1 billion onto exchanges, dry powder ready to ignite, while the yield curve steepens and Treasury's TGA battles the Fed's RRP, liquidity quietly rebuilding like storm clouds gathering. This ignored signal, M2's inexorable growth, whispers of impending parabola echoing past cycles where Gaussian channels turned green before explosions, and now with Trump-era trade deals easing tariff fears, $750 billion in U.S. energy exports to Europe. Removing headwinds, the macro tailwind strengthens, positioning Bitcoin for a nuclear 2025, where it could shatter $200,000 or more, not just as speculation but as a profound shift. An emotional vindication for the hodlers who weathered storms, a dramatic climax in the saga of decentralization triumphing over centralization, where the little guy armed with a wallet challenges empires. And as the camera pulls back on this epic timeline, from Satoshi's spark to the present precipice, the audience feels the pulse of history in motion, the thrill of uncertainty, the hope of revolution, and the undeniable pull of that overlooked signal, urging us to listen before the next big move reshapes the world forever. Because in the grand theater of finance, Bitcoin isn't just an asset. It's the protagonist in humanity's quest for monetary freedom, and the curtain is about to rise on its most spectacular act yet, with M2 as the unsung director orchestrating the symphony of surge that no one saw coming.